So that's some companies that surprised on the upside. There have also been some disappointments. What are some of the, I guess, the disappointing results that have caught your eyes so far?
Yeah, so there's been two that stood out, and I would say in both of these examples, it's a product of the success that these companies have had, or what they experienced heading into results. The first one was mineral resources. So these guys missed on their profit line and their revenue line, but again, it had been so hot because these guys are exposed to two of the hottest commodities that we've seen over the last 12 months in iron ore and lithium. So the expectations, like the share price, were through the roof. And they did miss. It wasn't a massive miss, and the share price pulled back a little bit on the day. It has sort of steadied, though, around the $60 level. But again, it was slightly disappointing. And GMG, I must profess, this is a company that I like a lot and have ridden it since the March lows. It was trading down around 16 at the March lows last year and was about $24 heading into results. Now sits about 22, so it's come off about 10%. They actually beat on profit, but I think because they didn't update their expected distribution, that disappointed the market a little bit. Obviously some investors wanting them to hand back more of that capital that they've built up. But like I said, I love this company. I think the pullback is a buying opportunity. I love the fact that these guys are plugged into that big box retail with the likes of Amazon and whatnot, and the e-commerce side of things. So. That was one that did disappoint, but like I said, I think it provides an opportunity.
Yeah, Chris, I think those two companies are great examples of what you were talking about at the start of this episode about, think long term and, think about, does your thesis still hold? Because mineral resources, you zoom out on that chart and it is a phenomenal story. And similarly, Goodman Group is exposed to so many great trends in terms of the move to e-commerce and, one of their biggest customers is Amazon and all of that. So I think two stocks that may have disappointed in the short term, but long-term investors are probably sticking pretty fast to them.
Yeah, well, I certainly am, and I totally agree 100%. I think, these stocks, as you say, that are good long-term stories. All you're really hoping for is an opportunity to buy at a depressed price, because no one really likes chasing prices. I think we do all understand that if you want exceptional growth, you have to pay an exceptional price, but as human beings, we are reluctant to do it. So anytime you are presented an opportunity to buy a great company with a pullback in the share price, I think that's basically heaven for investors. So, yeah, like I said, I'll be having a crack at these two, I would have thought as well.
So, Chris, last week we had Henry Jennings from Marcus Today come on and talk about the Holy Trinity being, buybacks and special dividends and huge payouts. Are there any companies that you're interested in, going forward in reporting season, or do you have your equivalent of the Holy Trinity that you're looking out for?
Not quite as sophisticated as Henry's Holy Trinity, I must admit, but there were two sectors that I was very interested in heading into the season, and it hasn't changed. And those two sectors were materials, obviously the big boys, the big iron ore miners. We've got BHP tomorrow, will make for interesting reading, and of course Fortescue at the end of the month. And the size of the dividends and the buybacks and the specials and all those sorts of things. So still interested in seeing those. But the other sector that I was particularly interested in seeing, and this is more about the consumer and understanding where the consumer sits in all of this as we plunge back into, or plunge further into, in some cases, lockdowns once again.